Good morning, everyone. Welcome back to Morning Markets on Friday, the 28th of August. A couple of things to discuss today. The first of which, building on comments from yesterday about how the speech from Jerome Powell would be received by the market. So, in terms of the speech, we heard about the process that the Fed has been going through over the past 12 months, reviewing their targets that they look at in terms of employment and also in terms of inflation. Currently, the Fed have a 2% inflation target. Interestingly, that hasn't been achieved for a good number of years. Looking back at their chosen measure, it is back to 2012 and indeed the first half of 2012 that we have to go to get that measure at 2%. So the Fed have changed their approach from explicitly targeting 2% to looking to get an average of 2%. I think the key thing for us to think about there, in order for that to be achieved, inflation will need to run materially above 2% for a period of time. So effectively the Fed signalling their willingness to let inflation run ahead of their historic targets to achieve this new target of a 2% average. They also spoke about the importance of full employment and are going to look at that on a broader basis. So again, thinking back to the comments that the Fed have been making over the past number of months about the impact of COVID-19 on employment, they've broadened how they're going to look at full employment from the perspective of the US economy. The ramifications of that and how that plays out over the coming weeks will be thought through and will be analysed. I think what we need to see is how the Fed believe that can be achieved, because clearly what we have at the moment is a statement of approach, and we will have the FOMC meeting in September and we might get more detail then. In terms of what did that mean for markets yesterday, well, we saw the bond market sell off a bit, so yields rising, bond prices falling. Why is that? They're more sensitive to inflation moves, and particularly at the longer end of the bond curve. So we did see the 10-year and the 30-year yield step up. So the 10-year yield has moved up to the region of 77, 78 basis points. If we think back to the beginning of the month, we were at a significantly lower 50, 51 basis points. So quite a material move in 10-year yields, and then a bigger move in the longer maturity bonds where there's more of an impact of inflation. Again, this fed into equity markets. Primarily, steeper yield curve is positive for growth and positive for economic growth, which should support more of the value-oriented names, and we did see a little bit of that yesterday, a bit of rotation from the technology sector. Other things from yesterday, looking at some of the economic data, we saw the weekly claims number in the US come in at about 1 million, slightly down on the previous reading. Continuing claims still remain relatively elevated, some 14 million. But if we think about that over the past couple of months, that's been declining from a peak of some 18 million just a matter of months ago. So an indication of the ongoing trend of recovery in the employment situation, albeit the rate of change has slowed there. Other things that we discussed briefly this morning, just looking at Microsoft, one of the holdings that we have in the True Potential portfolios. Walmart is joining their bid for TikTok's US assets. I think that's really quite interesting that we've traditional, the world's largest bricks and mortar retailer, the owner of Asda here in the UK, getting involved with Microsoft in that deal. I suppose what it does say is that they recognise value in the consumer data that they may get from that. I suppose it's also an acknowledgement of the challenges their business faces from online competitors and online social platforms as well. So it'll be interesting to see how that evolves over the coming weeks, given the deadline that President Trump has set for a transaction to take place. Other things, very briefly, we continued just to look at Asian equity markets, mostly stronger following the US, exception of Japan, where there is speculation that Shinzo Abe, the longest serving Japanese Prime Minister and probably the architect of quite significant monetary and fiscal change within the Japanese economy over the past 8 years, is potentially rumoured to be resigning due to ill health. difficult to see a new person coming in and trying to disrupt that significantly, but if there is a change in leadership, it does bring about uncertainty, and that'll be something that we'll have to contemplate over the coming weeks. That's it from me today. Just also like to say that the team that produced these videos in the background, Graham, has done his work from home video today, so please do take a look at that and you'll get to see the behind the scenes of how we put the video together. Many thanks and have a good weekend.